Good afternoon and welcome to the audience of today's Opportunity Day session. My name is Ingrs Q3, the CEO of INGRESS Industrial Thailand, Public Company Limited on 13th of September 2024. Thank you again for attending this session, which we will address to you the operational and financial results for first half FY 24-25, ended 31st July 2024. Our session today will be covering operational highlight, which will be presented by the CEO and followed by the financial results for first half FY 24-25, 6-month period ended 31st July 2024, which will be presented by myself later on. And then after the conclusion of the presentation, we will have a question and answer immediately after that session. Without further delay, I would like to invite Kun Rizal to start our presentation today. Please welcome Kun Rizal.
Thank you very much, Kunedi. Good afternoon to everyone and welcome to the online opportunity day for INGRESS, covering first half of fiscal year 24-25. I'm delighted to share the latest update with you this afternoon. For today, I will be presenting the automotive industry overview, INGRESS product overview, INGRESS business overview, INGRESS customers, and our future products to meet the challenges of the future. So without further ado, let me start the presentation with the automotive industry overview. If you look at the overall landscape of the automotive industry, you can see that Thailand and Malaysia are forecasting a lower performance as compared to the previous year, while Indonesia and India have forecasted a higher, better performance than previous year. When we zoom in into individual countries, in Thailand, for example, you can see that the TIP has improved based on the forecast ending June 2024. However, TIV is on the decline by about 3.3% as compared to previous year. In recent announcement in August, FTI had announced further revised forecast for the TIP in Thailand and also the TIV in Thailand, whereby the TIP in Thailand is now reduced further to 1.7 million cars and TIV is also reduced to 0.55 million. That is a huge impact to the industry due to the further volume reduction. In Malaysia, if you look at Malaysia, the TIP and TIV is not better than previous year. The TIP is about at 0.7 million. That's a minus 4.5%, and the TIV is at minus 12% as compared to previous year. However, there is a positive upside on the TIV in Malaysia, as recently announced in the previous months, that it will be a slight increase up to from 0.74 million to 0.75 million. Indonesia, on the other hand, showed positive growth in TIP and TIV. However, there is also a further announcement on the reduced forecast on TIV from 1.1 million currently to 1.02. That is a slight reduction in the TIV in Indonesia. India is showing good prospects with the TIP and TIV growing by about 3% from previous year. So we are expecting some good volumes from India in the next in this year.
Okay, Kun Rizal, I think based on the revised numbers, can we conclude that based on latest information that we have, Indian and also Indonesian operation or and Indonesian market will be better off in 2024. But you see, Indonesia, Thailand operation is very challenging now. Thailand operation is very challenging.
Right.
For Malaysian operation, it's all depend on Produa, the main market leader now. I think if the right direction by Produa, I think Malaysian operation can also be improved in 2024, or at least match whatever what we achieve in 2023. But never mind, let's we see the actual performance for half year. I think.
Yeah, thank you. Please. Let me bring you through the automotive industry overview for first half performance of this year. If you look at the overall automotive industry performance for INGRESS operational countries, the first half performance decreased as compared to the same period in the previous year, both for TIV and TIP at 6.4% and 10.9% respectively. With the exception of the increase in Malaysian operations for both TIV and TIP, we hope that this will cushion the negative impact from the other countries for the overall INGRESS group performance. Zooming into TIV, total industry volume for first half fiscal year 24-25 against same period last year. If you look at the overall countries, only Malaysia is showing a positive trend, whereby Thailand, Indonesia, and India is showing a slight decline. That gives an overall TIV performance of lower by 6.4%. Thailand is basically quite worrying because the decline is quite huge, mainly contributed from pickup sales, domestic pickup sales basically. This was as a result of stricter loan approvals by Thailand domestic financing institutions, and further to add salt to the wound, the influx of EV vehicles, which is positioned at a lower price, impacted the TIV sales further in Thailand. Malaysia, I would expect a better performance to continue for the full year. Let's hope this will happen.
Yeah.
And we go next to TIP, total industry production on the first half 24-25 against the same period last year. In reflective to the TIV, you can see that TIP is also declining in the countries, similar countries to what I mentioned. However, with lower impact a bit, Thailand shows a lower decline in TIP, mainly because of supported by the exports, which is still quite good, I believe. Malaysia is still maintaining at about 3.8%, almost similar to TIV. Indonesia lower a bit, I think also due to some influx of EV vehicles coming in. India is showing further reduction of TIP in the first half of this year. So going forward, I believe that in the quarter 3 and quarter 4, we would have a better performance based on the forecast of the automotive industry mentioned earlier. So if we move on to what INGRESS is doing now, our latest products overview. let's start with the first product, which is our traditional products of roll forming. We have been consistently getting orders for the roll forming products. However, with the new influx of technology from EV vehicles, we are also preparing ourselves to include not only cold roll steel roll forming, also high tensile and aluminium roll forming in anticipation of the EV lightweight vehicle requirements. So this will further enhance our roll forming business to include new product lineup for the future. Next, we go to stamping products. This is basically the biggest revenue contributor for the first half of this year, which is about 70% of our total group revenue. Stamping products has always been our core forefront products, with mainly for body white assemblies, for side structures, underbody parts, and also small blanking processes. We have been using high tensile steel sheets up to 1,500 currently, but we are now planning to go up to a tensile strength of about 1,800 megapascal, and also to do aluminum sheets. Yeah. So as a first product for these aluminum sheets, we have, if you look at item number 7 on the chart, this is our heat management products, which are heat shields made of aluminum. We are already supplying to two models from customers at the moment. So this will be under our new product lineup going forward. And notwithstanding that, we also have developed ourselves into the die making business, which is also we complement our stamping operations through the tooling requirement for the stamping. If you see from our previous performance report, during pre-COVID, our dies making capability was only small size dies. But since then, after the COVID, we have developed our capability to do high tensile dies up to 1,180 megapascal. And in complementary to that, we are also capable now of doing aluminium dies for aluminium parts, as well as fine blanking dies. So these dies are previously procured in steel materials, but now we are also able to do casting dies for new products, which gives us the capability to do design and manufacturing of dies up to sizes of B class and A class. Next. For the next INGRESS products overview, in support of all our manufacturing operations in the 4 countries that we are present, we also have in our group companies an automation solution provider company, which supports the robot automation and specialized machine requirements, manufacturing execution system, artificial intelligence and inspection systems, big data analytics with cloud, that supports our current manufacturing operations to further enhance efficiencies in all those plants to be more cost effective and also to improve our bottom line. Our focus will be in the smart factory areas, where we have introduced manufacturing execution system, production monitoring systems, and also AI intelligence and vision inspection systems to our line. Notwithstanding on automation, we are currently embarking to utilize autonomous mobile robots, or popularly known as AMR. Cobot, we have already been in operation, and also the press and assembly line automation. Another factor of improvement that we are moving towards is to have the capability to do R&D and product design, and as well as engineering simulation. These are part and parcel of the requirement that the OEM has imposed on us to further enhance our capability to support the OEM moving forward. Okay, in the next slides, I will brief you on the INGRESS business overview. Overall, in the fiscal year 24-25, we have secured a total of 12 model launches, of which 2 models have been launched in Q1, which are the Ford model in Thailand and the Mahindra model in India. We have also completed 3 launches in Q2, which are the Honda City hatchback in Malaysia, Mahindra P201 in India, and Mahindra W502 in India as well. Year to date, we have completed 5 launches, as you can see from the slide. We have a further 7 model launches in the Q3 and Q4, which I apologize, I will not be able to reveal which models are they due to secrecy with the OEM. However, we are not only waiting for new model launches, we are also exploring new business penetration overseas. One particular customer is a potential customer, I would say, is Stellantis. This will be a global sourcing component supply from Thailand to European plants of Stellantis. So this will hopefully cushion the slow demand in Thailand and hopefully improve our top line and also bottom line.
I think apart from that, also we also have initiative on the Chinese OEM.
Yeah,
sorry.
correct. I missed on that. Sorry. We also not forgetting to jump into the bandwagon. I believe that the Chinese OEM are very aggressive, especially in Thailand and Indonesia. So we are also talking to some of the Chinese OEMs to register ourselves as a supplier for the EV cars. So at present condition, our customers are as presented. We still aim to become the preferred supplier of automotive components and parts to car makers in ASEAN, not only ASEAN, but also in the global market. As you can see, we are a supplier to almost all OEM across the globe. And we hope to grow this customer base with the inclusion of Chinese OEM in the future. Okay. In preparation for this, for the new future, INGRESS also is looking at a product rationalization of our current products and also introduction of new products. So this is basically to prepare ourselves for the onslaught of EV vehicles, which we put a lot of effort currently to enhance our current technologies, either with partnership or within the group, maybe in stamping, roll forming, and joining technologies. So these are initiatives that we have put in place, whereby we have also partnered with some competent partners that will support us to realize all these product groups, new product groups. If you look at the product groups that I'm talking about, the main is body and component product, which is our forte. Enhance that capability of the products to include multi-material body in white structures. This is also to support OEM direction on the lightweight body in white structure requirements. This multi-material body in white not only deals with steel, but also deals with higher tensile steel, aluminium, and composite fiber reinforced plastics. So this will be a component to be joined together as body in white. Therefore, we are developing now a specific joining technology to support this requirement. Notwithstanding that, on the roll forming, which is also our current capability, we are expanding the roll forming capability to include high tensile roll forming, ultra high tensile roll forming, and also aluminium parts of roll forming. So this is already in line at two of our plants operation in Thailand and also in Malaysia. The last product that we are looking at, which is the battery pack case, which is something very new to the market. I believe that in Thailand, it is just starting off. There is no real manufacturer that is building this. So we have put in place the capability at the moment, and we have several RFQs in the bidding stage at the moment for the battery pack case. And we hope that we could secure one or two of the projects very soon. So with all these products lined up, we hope that INGRESS will have a better future, and we hope that we can ride the wave of the EV influx, the migration of the ICE cars into EV in the future, and further sustain our presence in the market. So with that, I think that concludes my presentation on the operation side. I now pass the ball to Kunadi to report the financial highlights for first half of 24-25.
Okay, thank you, Kunamizal. Now I proceed with the financial results for first half FY 24-25. Before we deep dive into Ingres performance for the first half, for FY 24-25, for the period ended 31st July 2024, we would like to inform that the results were tabled and presented to the Audit Committee and Board of Directors on 12th of September 2024. And the announcement to SCT has been made immediately after the conclusion of the board. Okay, let us go through on the financial highlight for the first half FY 24-25. In terms of revenue for first half, the group registered revenue of 3.5 billion baht, an increase of 13% as compared to the same period last financial year, or an increase about 400 million baht. The increase were mainly coming from the three countries, Malaysia, Indonesia, as well as India. The main increase was coming from Malaysia with an increase of 323 million, followed by Indonesia and India amounting to 81 million and 19 million baht respectively. Thailand operation revenue, however, is aligned with the overall drop in volume, of which Thailand operation registered revenue lower by 23 million for the half year FY 24-25. In terms of GP margin for half year, the group registered GP margin of 40%, improved 2% from 12% registered at the same period last financial year. The improvement in GP mainly due to the continued control over the manufacturing costs across the group. So we did a lot of cost saving or cost reduction initiative at all levels, at all countries. Apart from that, higher sales volume and revenue from Hyundai in Indonesia also contributed to the increase in our GP margin, overall GP margin for this financial year, for this period, this financial year. In terms of absolute number, the gross profit increased by 30%, increased from 383 million to 497 million. For the selling and general admin expenses, for this half year FY 24-25, register selling and general admin at 400 million, increased by 10% from the same period, corresponding period last financial year. The increase, however, is lower as compared to the increase in the revenue, overall revenue of the group. So it's aligned with the group increase in revenue. So the increase is actually lower than the increase in revenue. Okay, for this quarter, actually we register profit after tax. We registered profit after tax of 51 million, dropped by 44 million baht as compared to 95 million baht last half year FY 23-24, and the net profit after tax and minority interest also lower by 38 million. We only registered 21 million baht as compared to 59 million baht. Lower profit after tax and minority interest for the first half this year mainly due to the recognition of gain and recognition of loss on forex for this quarter. For this first half. For first half, actually we suffer loss on forex amounting to 63.2 million baht. This is actually the loss coming from unrealized forex from the Malaysian ringgit loan by Indonesian subsidiaries. At the end of quarter 2, end of July, ringgit is actually strengthening as compared to baht. Last half year in FY 2024, we actually registered gain on forex amounting to 89.9 million, of which this is the same nature as what happened now. It's just that on the reverse side. Last year, the rupiah actually strengthening against ringgit. If we were to analyze without this forex element for both period, for half year FY 24-25, we actually should be better off than last half year financial year by more than 100 million. To be precise, it's about 109 million baht. The operational profit after tax for first half, without those forex losses, we should be able to register profit after tax of 114 million baht as compared to a marginal profit of 5 million baht for half year last financial year. Okay, next explanation on the Ingress revenue. Okay, before I explain on the details of the revenue, just on the clarification for total industry production. The total industry production, we align back to our financial year. The market total industry production refers to the 6-month period from February to July, aligned back with our financial year. Okay, based on the presentation previously, on the revenue side, only Thailand operation shows negative variances, dropped by 5% as compared to last year corresponding half year, with total industry production decreased by 18.1%. Malaysian and Indian operation revenue registered higher revenue by 17.4% and 8.2% respectively compared to last year corresponding year, with the total industry production increase in Malaysia by 3.8% and India by 2.5%. In Malaysia, the increase in revenue actually driven by improved sales and production by Produa. As for Indonesia, despite the total industry production dropped by 18.4%, the overall revenue, INGRESS revenue improved by 14.5%, mainly due to the increase in overall Hyundai volume production for INGRESS as well as for Indonesia and for export market. This helped us to overcome the slowdown in total industry production, of which the total revenue increased from 562 million baht to 644 million baht. Next, on the right side of the presentation is our current top 5 revenue contributors. In summary, it was the same. It was the same as the last quarter. Number 1, our revenue still lead by Produa with 52% market share, followed by Hyundai 15%. And number 3, 4th, and number 3rd, 4th, and 5th were Proton, Mitsubishi, and Honda with 7%, 5%, and 4% market share. For Produa brand, we only have in Malaysia. Hyundai, we only supply Hyundai in Indonesia, Proton in Malaysia, Mitsubishi in the 3 countries, of which in Malaysia, Indonesia as well as Thailand. For Honda, also for the 3 countries, India, Malaysia, and also Thailand. Okay, next on the right bottom side is the revenue by type of products. As mentioned by Kunal Rizal, our stepping products contributed about 70% worth of revenue for first half FY 2025. On the left bottom side, in terms of geographical analysis, Malaysian operation for half year FY 2025 contributed a significant portion of 62% worth of revenue as compared to 59%, also significant for first half 2024. So here we can see Kunal Rizal, Thailand operation contribution now shrink to 30%. So whatever initiative now, we are focusing also try to grow Thailand to be, because Thailand used to be contributing about 40% at least, 40% worth of revenue. But because there's no significant expansion in Thailand, it's only previously was only expansion in Malaysia as well as Indonesia. That's why now the market share only left with 30%. Never mind, I think we need to work on. Okay, moving on INGRESS statement of financial position. Okay, if we were to zoom in on debt to equity ratio for 31st July 2024, we maintain our debt to equity ratio at 1.74 times as compared to 31st January 2024. For return on assets and equity, we compare the first half 2024-25 as against full year performance 2023-24. Despite in half year 24-25, we recognize an unrealized forex loss of about 63.2 million baht. But the return on assets and return on equity for half year FY 24-25 is actually better off than full year FY 23-24. For first half 24-25, we register ROA and ROE at 0.3% and 1.2% respectively. Okay, next. So I think that's all for my presentation. Okay, thank you. I think that's all from me, and thank you for your attention. I think we will move to question and answer session. Please feel free to jot down your question via the ICT system. It can be in Thai or in English, or I think that's only the 2 languages that we can understand. We have our esteemed team that will translate it to us to English, and we will try to address as much as we can within the allotted time. Please welcome. I think we can check already. This question. Is there any question from the floor? Okay, the first question: how is the company responding to the current economic recession in Thailand? What specific action and strategies has the company implemented to mitigate these challenges? Okay, I think let me answer that. Okay, basically, esteemed participants and shareholders, I believe that we are addressing basically on the two phases of the action. One is the immediate action, which is current year. We are addressing it through control of operational costs and also doing cost reduction from direct materials and also capex. Basically, if you look at our operation, the main cost contributor is on the manufacturing cost. So we are addressing on the material and also capex and doing cost reduction on the operations. That is immediate. On the long term, if the Thailand economic recession continues, we are initiating now new products from the market. One, as I mentioned earlier, we are at a bidding stage with the European customer, Stellantis, that will help bring up the revenue as soon as in 2026 and 2027. At the same time, we are not forgetting the Chinese OEM, which are coming in with plants in Thailand and also Indonesia. We are also approaching them for new products based on our technology and capability enhancement. At the moment, I can only say that we currently are registered suppliers for 2 of the Chinese OEM in Thailand. I will not declare who they are, but just for the understanding of the shareholders, that these are positive prospects that we are gearing up in case there are further recessions in Thailand. And our 2 companies in Thailand are basically focusing on those matters. On the other hand, our fine component company in Thailand, they have now the capability to do big size toolings, which is giving a big contribution margin to the top line and also bottom line. So these are enhancements further for us to improve our revenues, not solely depending on the volumes from the OEM. So I guess that's I think maybe another point. The other point would be we are currently strengthening our relationship with our current customer. So when we strengthening our relationship with the current customer, we can actually discuss further with them if there is any need for any localization that can increase our revenue.
Right.
Apart from the volume, then we can improve the diversification of our products. So we are doing that at the moment to address the current Thailand market situation. So I think this is good enough to answer the number one. So there's another question from the floor. What are the targets for the Indonesian factories?
These are financial targets. Which fiscal year aim to keep profit?
Okay.
And to you?
Okay, let me try to address this one. Okay, Indonesian subsidiaries, especially in relation to Hyundai project started in 2022. So they have certain numbers of target in terms of volume for export volume as well as local volume. During that time, the volume is not picking up as per the expectation. So our Indonesian subsidiary suffered more than supposed to be. But the series of negotiation and series of discussion with Hyundai, we received or we got the price adjustment last financial year in Q4. So it does help us. It does help us in terms of financially as well as survivability of Indonesian subsidiary. In terms of EBITDA, the company in Indonesia actually making a positive EBITDA since Q4 last year after the price adjustment. Apart from the price adjustment, we did a lot of cost reduction exercise as well as the operational rationalization in ensuring the survivability of Indonesian subsidiary. So currently, in terms of EBITDA, it's already positive and continue to improve month by month. And in terms of profitability, they still yet to register a positive profitability as the huge investment in Indonesia yet to give an impact or positive impact to us. So we expect they need if the volume for Hyundai, especially Hyundai, will improve as per current trend. So at least another 1.5 years to 2 years, Indonesian operation will be in black or will be in profitable. But currently, in terms of cash flow, in terms of EBITDA, Indonesian can survive, and the amount of losses mainly coming from the depreciation of the investment in Indonesia. So is there any other question from the floor? I think anything you want to add in, Rizal?
I think based on the growth in Indonesia market, I believe that mainly our main customer in Indonesia, which is the biggest contributing customer, is Hyundai. Based on the volumes, I believe that we will have a positive impact on our Indonesian operations. Yeah. And at this time, we are also talking to the Chinese OEM as well in Indonesia to build inroads to support them in terms of stamping and roll forming products that we can further enhance our revenue in Indonesia.
I think we still have time, but I don't see any question coming.
No question from the audience.
Okay, only two questions raised for this time. I think we can wrap up.
Okay, thank you very much, everyone. As there are no further questions coming up, I hope that our explanation is sufficient to give some confidence to the investors about our future products and also sustainability. Yeah, we are not sitting down lightly, because we understand that the market is going to be tough the next few years. Nonetheless, the new products hopefully will bring us further to the next level. Upon securing the new orders, we will share with you further on how we forecast to bring the company forward to a better position. Yeah, with that, I close the questions for today, and with a word of thanks for all parties attending today's session. Should there be any further questions or clarification required or queries required from the management, just feel free to drop us an email to ir@ingress.co.th. And we welcome all the questions and we will answer them promptly. And also we are open to any suggestions or opportunities that can help us further improve our performance in the future. And hopefully let's together support and bring us forward to a better position in the future. Thank you very much.